I wanted to ask a little bit about infrastructure in Europe right now. Obviously, a great deal of discussion and focus on Nord Stream, on the pipeline side and pipeline capacity, but I'm more curious now as to the import terminals. We can talk a lot about what we need to do to work with the FERC to advance more export opportunities here, but if you don't have the ability to receive things on the other end, it doesn't pair up. So I don't know who wants to field this question, but it's pretty broad. Is there sufficient capacity right now in Europe? If not, what projects, LNG import projects are being considered at this point in time? How do we make sure that that dovetails with what we're doing here with increased production, with their ability to receive on the other continent there? So I throw that out. We'll go to Assistant Secretary, and then we'll go to you, Mr. Mills.
Thank you. Europe is constrained on their ability to import LNG. Currently, they're limited to about 20 BCF per day. They're only using about 20% of that capacity that they have. And I think there are three challenges with Europe. Number one is limited distribution, pipeline distribution capacity. Number two, there is resistance to pipeline build-out, similar to what we see in the United States and different parts of the United States. It's fairly prevalent across Europe. And then number three, they're lacking storage facilities. And so the Department of Energy is working with our European allies on those issues. As you mentioned, Secretary Perry is over in Russia, but also Deputy Secretary Dan Briette is in Berlin. And so we're working with Europeans to create ways to reduce some of those constraints. And I think there's an investment opportunity on that side of the Atlantic Ocean for U.S. companies to come in and invest in the very much needed infrastructure.
Mr. Mills?
Well, Madam Chairman, I think the Secretary is absolutely right. I mean, the pipeline distribution system, to my understanding, is the critical impediment to expanding the use of the existing LNG terminals. Although they do face some challenges there, they're far less challenging in terms of capital formation than building an LNG facility, obviously. And as you know, there are quite a few under construction. Even Germany has now announced, as you doubtless know, plans for its first LNG import facility. I would just make the high-level point of the transformation, back to you, what you said at the outset and what you said at the World Gas Conference. There's been a transformation in the fundamental structure of this market. And we need to participate in unleashing that full transformation so that private capital takes the private risks, by and large, for these kinds of projects. Obviously, there are government permissions involved with building pipelines pretty much everywhere in the world. But the market price for gas collapsed before our first LNG exports happened. It was an anticipation in markets that this was coming. There was a glut coming. If we recognize that this glut is essentially permanent, then what we need to do is figure out ways to let capital markets function efficiently. That was my main point, is that if we put impediments here, whether at the state level or federal level, to the U.S. really fully functioning in this new commodity market the way we do in many other markets, will depress the appetite to build what's required in Europe and the rest of the world.
Let me ask on the capital investment side, because we all recognize that it is substantial. How does how do the LNG contracts play into that? We've moved from a situation where about 10 years ago, the average LNG contract for large volumes was 18 years. This year, the average contract has dropped to 5 years. Is that having any play or any influence in terms of ability to secure the capital necessary to make these long-term investments in this infrastructure? Mr. Mills and then Mr. Book.
Just to finish the point, of course it does, because these are very expensive, as you know, capital projects. So that's essentially what's driving my proposition that we need to find ways to take whatever other risks exist in the market. We've added a new risk to an LNG facility. Instead of 18-year contracts, 5-year contracts, and even spot markets. So when you look at broad capital markets at the level of abstraction, which actually is realized in practice, people make decisions based on what they think the risks are. If there's a risk we can remove, which is what I'm calling the permissions risk, and if America were not involved in permissioning, but encouraging and facilitating actively over a long time, and signaling that today is a permanent change, that can be a countervailing factor to offset these kinds of decisions and encourage investment for these shorter cycles.
Mr. Book?
Well, I absolutely agree that the faster that you can get things approved, the sooner you can get them on the water. That's a compelling case for investors who are looking at committing capital to a project. The infrastructure challenges in terms of raising money because of contract life are part of the story. Shorter contract life means there's less cash to take to the bank to get the loan, basically, in colloquial terms, because you don't have as long to guarantee. On the other hand, low prices were a factor, too, in making some of the financing issues more challenging. The nature of energy infrastructure is very much like the nature of upstream production. It comes in booms and busts, and more or less for the same reason. You have a sort of inelastic supply and long lead times to projects, and so things overshoot and undershoot and then periodically balance. But the world can move very quickly from surplus to scarcity, and in those opportune moments, financing opens back up. So contract life won't be the only constraint, because price was part of the story, and price won't stay the constraint for long, because when a higher price comes, financing will come back.
Thank you. Mr. Slocum, did you want to weigh in there?
I did. I don't think that the move towards short-term or spot contracts is any detriment to financing. It's the market that is moving this direction, and in fact, right now, if you've got a long-term supply commitment contract, that might be an impediment, because that might be locking you in at prices below what the spot market can provide you. There is a reason that LNG terminals in the United States are moving aggressively towards spot market, because that is where the market is moving, and they are simply following where the market is. And so in terms of developing these, that is absolutely a benefit. And I think that the long-term contracting model is not going to provide any assistance. And getting to the issue of siting that was touched on, it was commented that it's tougher to site pipelines maybe in the United States and Europe. Nobody talks about how tough it is to site pipelines in China, because in China no one has any rights. I am extremely proud to live in a country where we've got a variety of different constitutional protections that ensure that landowners have lots of ability to have a say in what goes on in their community. And so I don't think that we should be negatively talking about constitutional due process rights of American citizens to have a say in potentially sited infrastructure projects